Welcome to the deep dive.
Okay, so we've taken that really interesting stack of sources you sent over. Quite a mix, isn't it? Financial philosophy, some very specific market tactics, even personal reflections. And our mission today is, well, it's about synthesis. We want to explore how attitude and action really connect. How does the right mindset actually fuel the practical steps? And what are those concrete mechanics you need for real financial success? We're basically trying to pull out the cheat sheet from people who feel they've, cracked the money code.
Exactly. And if we want that cheat sheet, the place to start isn't the spreadsheet, it's the motivation. The sources were pretty clear on this. The absolute most critical thing is figuring out what you value, your why. Without that clear purpose, well, all the tactics in the world just sort of fizzle out eventually.
Okay, I get the motivational angle, but finding that why, that deep reason, that's often the trickiest get, isn't it? Did the sources give any, practical examples? How do you actually find that purpose? Yeah, they didn't stay abstract for long. The why boils down to practical freedom. Sure, maybe it's wanting to work in your PJs that came up, but it's bigger than that. It's the freedom to spend your time exactly how you want. One source put it really nicely. They said, time is the new luxury handbag.
Oh, I like that. Time is the new luxury handbag. That really shifts the perspective, doesn't it? It's not just about stacking cash. It's about buying back your time.
It started during a thunderstorm.
Non-depreciating asset.
She kissed
like
my
you said.
nose.
Okay, so
I've
if
been
that
processing
why
ever
is
since.
the engine, how do the sources say we should cultivate the right mindset to keep it running?
Well, there were about 10 mindset strategies mentioned, but we can sort of group them into maybe 3 big themes. Makes it easier to grasp. The first one, let's call it actionable optimism. This brings together that advice about believing you could do it, not getting stuck on past mistakes, and reframing negative stuff, like debt or risk.
Okay. But things like daily affirmations, doesn't that risk feeling a bit like, well, magical thinking if you don't have the practical side sorted? How did the sources balance belief and, reality?
That's a fair point. They emphasize that optimism only really counts if it leads to action. The real insight, I think, is that getting bogged down in regret about past financial decisions, that's just lost opportunity. So the sources push for a ruthless focus on what you can do now, today, and reframing debt, for instance. It's not about pretending it's not there. It's about seeing it maybe as the cost of past growth or even a tool for the future, not some kind of personal failing.
Right. That shifts it from guilt to utility. Makes sense. Okay, what's the second theme you pulled out?
Let's call it focused intent. This is where things like visualization and prioritization fit in. Making a vision board or really getting clear on your priorities, it might sound a bit fluffy, but the sources argue it makes your goals concrete, gives them emotional weight. And that clarity helps you allocate your resources, your time, your money, way more effectively, almost automatically.
Okay, focused intent. Got it. And wrapping up the mindset part, gratitude came up a lot. The sources seem to frame it as an active tool, not just a nice feeling.
Yeah, gratitude is really key for staying grounded. As one source put it, if you're always complaining, even your millions won't feel enough. So gratitude becomes like a daily practice, a mantra almost, that keeps you connected to how far you've come. Plus, they mentioned it seems to attract good things, including wealth maybe, because it shifts your focus away from what you lack, away from scarcity.
And that links nicely to the final bit of mindset advice about handling setbacks, forgiving your mistakes, which seems essential if you're also going to follow the advice to push yourself positively, take calculated risks, stay disciplined. You need resilience to bounce back.
Exactly. You have to be able to fail, forgive yourself, learn, and then adjust your approach. That resilience is crucial. And that mental discipline, that resilience, is actually the perfect bridge to phase 2, the mechanics of the market. This is where we shift from attitude to, well, the practical stuff, knowledge and habits.
Okay, mechanics. And the number one habit the sources seem to stress above all else, investing, specifically dollar cost averaging, DCA. They made a pretty strong case that just investing steadily, regularly, is way better than trying to perfectly time the market. Less stress, more effective.
Oh, definitely. Trying to time the market, that's basically gambling. DCA is the opposite. It's smart, it's disciplined. You set up a consistent flow of investment, maybe monthly, maybe bi-weekly, and you just let it run. You let the market continue while you sleep, as one source put it. It averages out your purchase price over time, minimizing the risk of buying everything at a peak. It's financial discipline 101.
And beyond that core DCA habit, the sources also really zoned in on adapting your tools to, well, the modern economy. There was some really specific advice for people who are self-employed or creators or running side hustles.
Yes, exactly. For anyone bossing their own gig, the old retirement planning models might not fit well. So the sources pointed to things like specific guides, like 5 best retirement plan options for self-employed creators and influencers.
Right.
Just knowing the difference between, say, a solo 401k and a SEP IRA, that can make a huge difference to your taxes and how much you save. That's high-value knowledge right there.
And sticking with that theme of modern income, the idea of treating every platform as a potential money channel, like Pinterest, it's not just for pinning recipes anymore. You can actually become a certified Pinterest creator and monetize your content. It's about actively diversifying.
Yeah, finding multiple streams. And this learning mindset, it wasn't just about individual tactics. It extended to the bigger picture, too, like including that piece on emerging trends in real estate for 2025.
Yeah.
It shows that successful people are thinking globally, watching how things like higher interest rates are making global deals, quote, wake up in new ways. You need that broader view.
Okay, hold on. Before we move to the next phase, we absolutely have to talk about that wild story, the credit paradox.
Ah, yes, the wealth whiz fact, they called it. The guy who held a world record for credit cards.
Yeah. Nearly 1,500 valid cards with a combined limit over, what, $1.7 million? It sounds completely bonkers.
It really does, like something out of a financial circus.
But here's the kicker, the really crucial takeaway for you listening, and it's kind of counterintuitive. His story actually highlights that your credit score isn't really about having a ton of accounts or a massive credit limit.
Exactly. The number itself isn't the key. It's the management. Responsible usage. That's what drives your score. Keeping your balance low compared to your limit, that's your utilization rate, and the big one, always paying on time. So the story kind of debunks the myth that more credit automatically means more financial security. It's about how you use it. Quality over quantity.
That idea of quality management, of smart usage, is a really smooth transition into our final theme, adaptability and continuous learning. Because maybe the most powerful tool you have is just your ability to learn new things and change your approach when needed.
Absolutely central. The strategy to keep learning. One source really emphasized how the more you learn, the more exciting it becomes to realize how much you don't know. It reframes ignorance, doesn't it? Not as a failure, but as this huge open frontier of opportunity.
And the learning isn't just about numbers and charts either. The sources pointed towards that quirky podcast, What Ice Money, with Elfin Gerard, Elphonomics, they called it.
Right, Elphonomics. And what's cool about that is it's not your typical finance show giving stock tips. It tackles really fundamental, almost philosophical questions, like how much money really exists, or even when can money be a cow? It forces you to question the basic assumptions you operate on every day. And questioning those assumptions actually makes your whole financial understanding stronger, more robust from the ground up.
Learning by questioning assumptions, that leads perfectly to adaptability. And the sources use a really interesting example here, the movie Catch Me If You Can, Frank Abagnale Jr.
Yeah, the master impersonator. It's easy to just focus on the criminal aspect, the con. But the deeper lesson the sources pulled out was about his incredible ability to reinvent himself, his intelligence, his confidence. It's a dramatic example of how far adaptability and, frankly, sheer nerve can take someone.
Right. And the actionable advice isn't go be a con artist, obviously. It's about channeling that quick thinking, that ability to learn fast, that confidence into legitimate goals. Confidence really can open doors, but the sources were clear. The real sustainable wins, the lasting wealth. That comes from mastering the game, honestly, not trying to cheat it.
So bringing it all together, what does this mean for you listening right now? We've talked about blending the mindset, believing you can, practicing gratitude, forgiving mistakes with mechanics, things like DCA, learning about new income streams, using credit wisely.
It's like a combination lock, isn't it? Mindset is the direction you turn the dial. Mechanics are the specific numbers. You need both lined up.
Well said. And it's important to remember that message from the sources. Some days you invest, some days you just survive. Both count. The key is just to keep showing up for your financial future, even if progress feels slow sometimes. Keep making those deposits, literally and figuratively.
So our final thought for you, building on this whole deep dive, is about taking action now. One source put it bluntly. The best time to grow your money was yesterday. The next best time is after this deep dive.
Yeah. So the challenge to you is this. Right now, think about your specific financial why. What is it really? And then just identify one small, immediate action step you can take towards it. Today, don't get weighed down by past stuff. Just focus on that next smart move that helps shape the future you want.
Thanks for diving deep with us today. We'll catch you next time.